special shout out to our sponsor, Qualia. Qualia is the category-creating digital closing platform used by thousands of lenders across the country to seamlessly work with their title and escrow partners. By working better together, Qualia is powering lenders to deliver a differentiated closing experience for their clients. Through real-time communications, closing status updates, and workflow management, Qualia brings lenders together with home buyers and sellers, title and escrow agents, and real estate agents for a secure and seamless closing experience. Qualia is proud to have been awarded the Housing Wire Tech 100 Award for real estate, as well as CB Insights FinTech 250 Award. Discover how you can work more efficiently with your title and escrow partners at qualia.com/innovators. That's QUALIA.com/innovators.
Greetings, everyone. If this is your first time joining us, welcome to the Mortgage Innovators podcast, where we deliver fresh and hopefully fun and entertaining insights on all things mortgage and the innovation propelling our industry forward. My name is Margaret Chiavini. I'm with New Res Correspondent Lending, and this week's episode is a Tech Talk segment from last year's Mortgage Innovators Conference, where William Tessar of Civic Financial Services discusses how investing in your customer experience to create lifelong customers could actually help you attract real estate investors. It's going to be a great episode. Before we actually get into it, I want to make sure that all of you know that the Mortgage Innovators Conference 2022, which is the power of innovation, is back in person for an experience that you definitely do not want to miss. We can't wait for you to join us May 2nd through the 4th at the Hilton Anaheim. Registration is now live, and information about sponsorship opportunities can be found at mortgageinnovators.com/conference. That's mortgageinnovators.com/conference. And now on to our Tech Talk.
Hello, my name is William Tessar. I'm President and CEO of Civic Financial, located here in Redondo Beach, California. We're an institutional private money lender that focuses on short-term bridge and rehab, multifamily, and long-term rental investor loans. We have about 300 employees licensed in 23 states across 15 offices throughout the US. Annual fundings of about $1.5 billion and a true leader in this space. Personally, I've been in lending 35 years, 30 of those years on the conventional side of the aisle, and the last 5 in this channel. I'm honored to share with you today my thoughts and feelings on the customer experience. I think before we start, it's important to have a clear picture on what the current market landscape is and what tomorrow is going to look like. For me, I've built an entire career and coined the phrase of customer for life, which is not really a tagline, but it's really more a way of life in lending if it's something you believe in. And that goes back about early 1990s. For the last 3 years, the conventional lending space has realized record numbers off the back of historic low rates. Today's qualified borrower has benefited 3 and 4 free rate reductions over that same time period, and it has created volume levels previously unheard of in the space and made top loan officers' numbers increasingly bigger and bigger each and every one of those years. It's truly an incredible time to be an originator. I don't believe that this rate reduction rewrite time frame lasts very much longer. I believe it actually is slowly coming to an end right now. And I think if that's true, originators are going to need to transition from that of being an order taker and to get a much better understanding of what the customer needs and their wants are. Some time ago, I heard a great saying, and it went something like, God gave us 2 ears and 1 mouth, and we should use them proportionately. And I think today that probably applies more, and tomorrow even more so. There's so much to learn from the customer, and it'll be 100% mandatory if you ever hope to serve them properly and have a chance of creating that customer for life. Your customer's short and long-term plans need to be understood. So are they going to be working from home? That seems to be a a super popular question today. And are kids going to college soon? Is there any home improvements in the near horizon? Do they have accumulated debt that needs to be paid off? What about a vacation home or a rental home? Once you know everything there is to know about your customer, then you're going to need to customize the experience and touch points that cater to that. This, again, is not order taken. I believe that the customer experience begins with hello and it ends never. It literally never ends. You think about it, like so many of us in this space work our tails off at hunting new clients. We take ads out, we do social media and drips and telemarketing and lead purchases and all sorts of other things. We spend a ton of money hunting new business and we spend very, very little time nurturing it. And quite frankly, it's just the wrong approach. It costs a company 7 times more money to acquire a new customer than it does to nurture an existing one. And that alone should create change in all of us. So what we do here at Civic is operate in a targeted channel of lending. It's business purpose loan space. It's non-owner occupied bridge, rehab and flip, or rehab and rental. This keeps us away from competing with all the middle and large conventional lenders, and quite the opposite. We're able to partner and serve those lenders as we have a niche that they currently aren't focused on. And I think when you think about bringing a new menu of loan options at a time where the rewrites go away, it'll augment that gap that's going to need to be filled immediately. And the reality is that the customers who are looking for business purpose non-owner occupied loans will go elsewhere if you as a conventional lender can't serve them. You don't want that. Additionally, when you think about the bridge or the rehab being complete, they'll be looking for takeout financing, whether they're selling that property or refinancing it into something long-term. And another second bite of the apple, again, goes back to serving the client. 15 to 20, if you take your whole database, 15 to 20% of a typical originator's database is a potential investor who may need a bridge loan to buy an investment property or rental or flip. And then that typical investor will fix up and flip between 3 to 4 loans per year. So you think about the 3 to 4 loans, 15 to 20% times your database, and then all the takeout opportunities, it becomes a huge opportunity. So just think about this. With that knowledge, you need to understand and commit to what customer experience means. What does it mean to you? What it means to Civic may be entirely different. Most folks think that the whole customer experience thing is customer service. Customer experience for us is really the sum of the customer's entire experience at Civic. And that's from the initial visit to the website to originate our loan lending platform, to the account executive, through the loan process, and then to funding. And then after the loan funds, post-funding draws, and let's not forget servicing of the loan, all the way to the payoff. Each one of these customers' touch points refers to very specific experiences where customers' requests and needs should be heard and serviced, and when assistance or help is needed, delivered. Like, anyone can talk about customer experience, but how do you measure it? And so for us at Civic, there's really 2 forms of measurement. The first is our NPS, or what's called the Net Promoter Score. It's the percentage of customers rating their likelihood to recommend our company or products or service to a friend or colleague. We've had incredible results since we've employed that measurement here, somewhere between 88 and 90, where national averages in lending is somewhere below 40. And then the second we recently added is our CSAT, which is a customer satisfaction score. And that's just basically an exaggerated level of questions to show different levels or shades as to the borrower experience. We get about 50% of all of our customers to respond to that. 90% of that 50% is extremely satisfied. Yet we still measure and manage all the areas that are communicated needing improvement. And I think the point to note is at Civic, we inspect what we expect. Inspect what you expect, and then address the areas needing improving in real time to ensure we get it right, and that our customers are served in the manner we're representing to them and that they expect. When we have a detractor score, right, which is someone who is or was unhappy, that literally goes to every single senior management individual in the company. We have 14 of them, and the manager of the originator connected to that borrower. And it's an immediate address of all outstanding issues to full resolution. So we get them. Like, certainly like to brag about being perfect with our customer experience, but it isn't. It's an ongoing work in progress. And here's what I found to be true. It's that the contact and the communication and the effort towards resolution means as much as the final result in most cases. And so for us, we want that final result to mean we have someone championing our cause and out there being a rallying cry for Civic. Doesn't always work that way, but it will not be for a lack of effort. And I do think, like, if you look at what you're doing for that customer experience, one of the strongest and most clear indicators in evaluating how well your firm is doing specifically as it relates to that is the repeat business. So when I started at Civic in 2017, we had a 14% repeat business number, which now sits at just over 45%. And we've received industry accolades about the 45% and awards and whatnot. But the way I think about it is, yeah, great. Let's not break our shoulders, patting ourselves on the back so much. What about the other 55%? That's now not part of the equation. So we get to dig in deeper and continue to find out ways that we can be better. There was a time not long ago, we used to measure cost per lead or cost per closing, and that's completely transitioned our focus to being 100% on cost per customer acquisition. And I think if you think about, like, the average customer in this space will do 2.7 loans, at least with us. With our increased attention to the detail mentioned earlier, we can move that number to closer to 4 loans. That's a 50% improvement, or said another way, it's a total game changer. What most people might not understand, that if you could increase 5% that retention number one way or the other, and in this case, let's say increase it, you can drop another 25% to your bottom line. It's a little bit going a long way. I do think it's important that you never stop learning about your customers. This belief and application for our employees is company-wide. And so I've told you a lot about the customer and the customer experience and our focus. And I think as a lender, our focus on the end customer is shared with that same amount of energy we put into helping our brokers improve their approach to customer experience and retention, and provide them with the tools and platforms that equate to a benefit for their clients. And so you say, well, what is that? We private label our Originate. So that's a platform that they're delivering that customer experience. We have a national Home Depot discount that is deeper and bigger than anybody in the space, and we pass that Home Depot discount onto their investors so that it could be a value add given by them. We help them stay in touch through a drip campaign under Total Expert, so it's they could touch their clients through a variety of different marketing means and social media hits, 6 to 12 times a year, whatever their fancy is. We have Victory Club for top producers, and lastly, which is most important, access to capital. Right? If you're in the business of lending money, don't run out of it. And so, yeah, we have unbelievable access to a tremendous amount of capital. We close in 7 to 10 days. We lead in rates and products, and it makes for a pretty good partnership. And I think, like, if you begin with the end in mind, and that is the customer for life, and then you model your entire business around that of being a total service to your customer, you'll be left with a business that will withstand every new lender popping into the space, can scale much faster in changing lending markets, and the changing lending markets are coming, much less marketing dollars, and ultimately you're going to feel more secure about how you built your business and its ability to withstand the many changes ahead and they're coming. Remember, customer experience starts at hello and ends never.
Thank you for listening to today's episode. If you like what you heard, please make sure to subscribe to the Mortgage Innovators YouTube or wherever you podcast. Until next time.